Tentho Innovation Hub, putting yourself on payroll as a business owner. So you've turned your dreams into a thriving business, and now you're navigating the maze of adulting that comes with it. Congratulations, you're officially a business owner. But wait, there's a plot twist in your entrepreneur movie. It's called paying yourself. Yes. How do you get that hard-earned money into your pocket legally and wisely without accidentally inviting the IRS for tea? Understanding how to navigate payroll for yourself is less about avoiding villains and more to do with making smart choices. So hold on tight to your seat because we're about to dive into the exciting world of salaries and those ever so fun tax implications. Ready to demystify the paycheck puzzle and possibly save the day and some dollars? Let's get started. Did you even know it is possible to receive a W-2 as a business owner? It is, and it may be advantageous for you as an individual and for your business. Let's break it down. First on our journey is tax efficiency. Being on payroll means your taxes, income tax, Social Security, and Medicare are withheld and paid regularly, which can help avoid underpayment penalties. This can lead to tax savings, a word we all love, except the IRS. Second area to consider are retirement contributions. Being an employee allows you to contribute to employee retirement plans such as 401k, potentially increasing your retirement savings. This is also another way that leads to tax savings. You can choose a traditional 401k route, which will allow your business 401k contribution to be a business expense, and your individual contribution will reduce your personal taxable income. You may be able to designate some of your contributions as a Roth 401k, and your earnings and withdrawals can grow tax-free. Third, we look at clear separation, which means keep your hands out of the business bucket. Being on W-2 also helps maintain clear distinction between business and personal. It can help with record tracking by completely separating the business and your personal finances. This helps simplify tax preparation work, which also means more dollars in your pocket. Fourth is the ever-important Social Security and Medicare benefits. By paying into Social Security and Medicare through payroll taxes, you ensure eligibility for these benefits in the future. I'll let you in on my personal, not professional opinion. I'm not holding my breath on this one. It is always best to plan for your future in a variety of ways. Topic for another day. Beyond the compliance, business, and tax reasons to put yourself on W-2, there are a number of personal benefits as well. If you've ever gone through the mortgage approval process to buy a home, then you know that banks love W-2 income to get that loan approved. But wait a second, business owners are economy growers, and our income is just as good as someone else with a W-2 salary working for another company. Hey, we don't make the rules, but learning how to play by them sure makes our life easier. Let's consider what this looks like for your stability of income and proof of income. First, with W-2 income from your business, you can receive consistent paychecks and verifiable income. Regular W-2 paychecks demonstrate a consistent income stream. This is highly favored by lenders if you've ever applied for a mortgage while being self-employed or as a business owner. A W-2 form is widely known and accepted as income proof. Second is a potentially easier loan approval process by simplifying the number of documents requested by the underwriters. This is not to say this approach is right or best in your personal circumstances, but it definitely can make life a little easier as a business owner. And sometimes easy is okay. Does this intrigue you? Great. So how do you do it? First, determine your eligibility. Your business legal entity must be structured in a specific way to take advantage of these benefits. For example, a sole proprietorship cannot pay an owner via W-2 wages. Partnerships also cannot pay partners with W-2 wages. An LLC is a structure that offers great flexibility, as you can elect different tax treatments. One example is the S-Corp election, which will allow owners to pay themselves on W-2 wages. The C-Corp structure is also a way for shareholders to receive W-2 wages. But don't go running to change your entity structure yet. It's always advisable to consult with a professional first, like us at Tentho Accounting. Even if you have a partnership, there are ways that we can help you structure the business in order to implement the benefits of steady and regular pay. Second, set a reasonable salary. With S-Corps particularly, the IRS requires that the salary you pay yourself is reasonable for the work performed. This means it should be comparable to what other businesses are paying for a similar role. Third, we recommend using a payroll software or payroll service provider. Filing payroll tax returns by hand is a complete pain. Think about where you are as a business owner and where you add value. It's probably not standing in line at the post office. Software tools and outsourcing to a service provider can automate the process for you and ensure taxes are correctly withheld and remitted to the appropriate agencies. We partner with industry-leading software companies here at Tentho Accounting. If you choose to use a software payroll provider, then your work stops here. You're off to the races. You will receive a regular salary just like any other employee, complete with your withholdings. If you do choose to do it on your own, then we have a few more tips for you. Fourth, with the do-it-yourself payroll, remember to provide yourself with regular paychecks and stay on schedule. Pay yourself a regular salary just like any other employee. Complete the payroll tax withholdings for income tax, Social Security, and Medicare. Fifth, with DIY payroll option, ensure all employer and employee side payroll taxes are properly calculated, reported, and paid. This includes federal taxes, contributions to Social Security, Medicare, and any state employment taxes. Without a payroll software, you will need to calculate these manually, make timely tax payments, and accurately file to the corresponding agencies to avoid any penalties or issues with the tax authorities. No one wants that. Another personal secret for me, it's not very fun to manually do this. I have done it myself before. Lastly, on the DIY payroll plan, provide yourself with a W-2 form at the end of the year, documenting your earnings and taxes withheld. You will also need to complete Form 941 for quarterly federal tax returns and Form 940 for federal unemployment tax. Make notes, though, that the exact form will depend on your type of business and other circumstances. Also remember to look into your state and local filing requirements as additional forms may be required. As always, we suggest to consult with a professional, like us at Tentho Accounting. And that's it. You'll receive all the benefits of a W-2 employee as a business owner. Take control of your financial future. As we conclude this session at Tentho Innovation Hub, remember that stepping into the role of a financially savvy business owner doesn't just mean managing your business's money. It's about managing your personal prosperity as well. Putting yourself on payroll is a strategic step towards not just surviving, but thriving in your business and your personal life. It's about making sure that your hard work today pays off tomorrow, and that you're building a sustainable future for yourself and for those who depend on you. Act now. Join the movement towards financial empowerment. Don't let another day pass without taking control of your financial destiny. Start implementing what you've learned today and see the difference it makes when you transition from just working in your business to truly working on your future. If you're ready to dive deeper into financial management and continue your journey with us, enroll in our next course. Or if you need personalized advice, reach out to our team of experts at Tentho Accounting. Your story doesn't end here. It's just the beginning. Secure your financial independence now and lay the groundwork for a prosperous future. Take action today for a better tomorrow. We're here to guide you every step of the way.
I'm Helen Brazel-Kokoris, the co-founder of Tentho. Today we're talking about estimated tax payments. Quickly, I'll define it. Estimated tax payments are periodic payments made throughout the year to the IRS. The IRS wants their money owed to them as you earn it. We encourage you to lean on your CPA or us at Tentho Accounting to properly calculate your estimated tax payments. One of the methods for the calculation of estimated tax payments is 90% of your current year's taxes owed or 100% of your prior year's taxes owed. For high-income taxpayers, the threshold is 110%. Payments are typically due on April 15th, June 15th, September 15th, and January 15th. Payments can be made online through the IRS Direct Pay system or EFTPS, or by check or money order attached to vouchers from Form 1040-ES. If you're the type of person that needs money to be out of sight and out of mind in order to save, maybe it's best that you set up a separate savings account to hold your money and set aside tax payments as you earn that money. Percentage of your monthly income can be transferred into this account. At Tentho, we are always here to help you navigate these payments. So give our team a call if you ever feel confused. Tax law and navigating the systems can be complex. We encourage you to stay proactive with your tax payments. Thanks for your time here today, and enjoy our other resources available to you on many business and accounting topics.
Welcome to Tentho Innovation Hub. I'm Helen Brazel-Kokoris, co-founder of Tentho. Today, I'm explaining the importance of separating your business and personal finances. This short course focuses on transparency, effective communication, understanding the personal impact on your business, knowing yourself as a business owner, and differentiating personal budgets from business budgets. Let's set you up for success. First, the importance of transparency. Why does transparency matter? Transparency in your financial dealings is crucial. It builds trust with investors, financial institutions, and business partners. When your financial records are clear and accurate, it's easier to secure loans, attract investors, and manage business relationships. It's also easier for you to manage your business. Here's a business example. Imagine you're seeking a loan to expand your business. You present your financial records showcasing a clear separation between personal and business finances. The lender sees well-organized documents, leading to a quicker approval process because their life is made easier. This organization with transparency can be the difference between securing the funds you need and facing delays or rejections. Besides making it easier for you to run your business, the IRS will raise a red flag to any personal expenses that are commingled within business financial statements. So let's summarize. Clear, organized financial records build trust and open doors to financial opportunities. 2. Effective communication. Communicating financial decisions. Effective communication about your financial decisions with your team, partners, and family is essential. It ensures everyone understands the financial health of the business and can contribute to its success. This contribution of support can be via physical or emotional support. So here's a business example. Your business is facing a cash flow challenge. By openly discussing this with your business partners, you can collaborate and brainstorm solutions, such as adjusting budgets or finding new revenue streams. This approach prevents misunderstandings and keeps everyone on the same page, working toward common goals. Additionally, opening up about your business challenges to your significant other at home can provide support so that the household finances do not put additional strain on the business.
So let's summarize. Transparent communication fosters teamwork and problem solving, with everyone working towards solutions together. Number 3, understanding the personal impact on your business. So how do personal finances actually impact your business? Whether you like it or not, they do. If your personal finances are strained, it can lead to hasty business decisions or the misallocation of business resources to cover personal expenses. Here's a business example. A sudden personal expense requires you to dip into business funds. This disrupts your business operations, causing delays in paying suppliers or employees, ultimately affecting your business's reputation and operations. Keeping personal and business finances separate avoids any pitfalls and ensures smooth business functioning. It keeps your employees trusting you as a business owner as well. So let's summarize. Maintaining personal financial health prevents business disruptions. 4, knowing yourself as a business owner. Take a moment for self-assessment. Understanding your financial habits and needs as a business owner helps in making informed decisions. Are you risk adverse or risk taker? Do you need a stable income from the business, or can you reinvest your profits back in for growth? Here's your business example. If you are risk adverse, you might prioritize building a substantial emergency fund for your business to handle unexpected downturns, rather than investing aggressively in new ventures. Knowing your risk tolerance helps you make decisions that align with your comfort level and business goals. Let's summarize. Know your risk tolerance to make informed, comfortable business decisions. Number 5, personal budget versus business budget. Maintaining separate budgets. It's essential to maintain separate budgets for personal and business finances, and this separation helps in accurate financial tracking and ensures that personal spending doesn't interfere with business cash flow. Here's your business example. Creating a detailed budget that includes all operating expenses, projected revenue, and investment plans helps in managing business growth effectively. Simultaneously, a personal budget ensures you live within your means and avoid dipping into business funds for personal expenses. Within the business budget, make sure to include an appropriate salary for yourself or periodic distributions. Let's summarize. Separate budgets ensure clarity and financial health for both personal and business finances. In conclusion, embrace finances and allow the separation of business and personal within the numbers. This provides financial health in both areas. Maintain transparency, communicate, understand your personal impact on your business, keep separate budgets, and you will be set up incredibly strong for success in your personal and business life. Thank you for joining this course by Tentho. We are here to help you implement these tips. Remember, well-managed finances empower you to make well-informed business decisions that will drive your business forward.
Welcome to Tentho Innovation Hub. My name is Helen Braswell-Kokoris, co-founder of Tentho. Today our topic is linking cash flow management with strategic business goals. We will explore how managing your cash flow effectively can propel your business forward, achieving its broader strategic objectives. Rather than seeing cash as necessary for survival in your business, think of it as a crucial element in your business growth and success. Introduction to strategic cash flow management. Effective cash flow management is more than just tracking how much money comes in and goes out. It's about strategically harnessing this flow to support and fulfill your business's long-term goals. Look around the corner rather than only the step in front of you. Understanding this connection is essential for any entrepreneur looking to expand and innovate. Understanding the role of cash flow in strategic planning. Strategic reinvestment. Proper cash flow management allows you to strategically decide when and where to reinvest in your business, such as in product or service innovation, scaling operations, or entering new markets. Risk management. Maintaining a healthy cash flow enables you to manage risks more effectively by providing a financial cushion that can absorb the unexpected shocks. As business owners, we set the plan for the day, and then the plan inevitably will change. Give yourself the cash buffer so that you can stay focused on your bigger goals, and a daily change in your plan is more like a pesky fly rather than a catastrophic episode. Aligning cash flow with business goals. Aligning your cash management practices with your business goals is crucial. Whether your goals involve growth, stabilization, or diversification, each will dictate a unique approach in managing your finances. Forecasting and scenario planning. Utilize cash flow forecasting to visualize how different strategic decisions could impact your liquidity. For example, what does hiring 2 employees do versus leasing a machine? Can you accomplish both goals at the same time, or do you need to implement one goal and then a few months later, the other? Budget alignment. Ensure that your budgeting efforts support your cash flow management, particularly in terms of funding strategic initiatives. Cash flow forecast and budget go hand in hand. If you have one without the other, it is like deciding to build a house without hiring an architect. Leveraging cash flow for strategic opportunities. Market expansion. Positive cash flow can be leveraged to finance market expansion or the development of a new product, allowing for growth without the need for external funds. Acquisitions. If your strategy includes acquisitions, managing your cash flow effectively can allow you to plan and execute these without the undue financial strain. It is all about planning ahead and prioritizing your goals for your business. Mitigating risks with proactive cash flow management. Debt management. Strategically manage your debt with an eye on cash flow forecasts to ensure that repayment obligations are timed according to your cash inflows. Emergency reserves. Use insights from cash flow management to determine the optimal size of emergency reserves, thus protecting your business against unforeseen financial needs. Look internally at your personal risk tolerance for this one too. Do you find yourself anxious if the cash falls below a certain level? If so, then lean on the larger end of the range for emergency cash reserves. In summary, effectively linking your cash flow management to your strategic business goals requires diligence, foresight, and a proactive approach. With this, you can navigate your business through challenges and toward greater opportunities. Thank you for joining this course by Tentho. By applying these strategies, you'll enhance your ability to manage your business finances proactively and align your operations with your strategic ambitions. Keep refining your financial strategies and adapting to new business dynamics to achieve sustainable success. Welcome to Tentho's course, showcasing the top 6 common cash flow mistakes, and most importantly, how you can avoid them. Managing cash flow efficiently is crucial for the sustainability of any business, yet it is often overlooked or misunderstood. Today, we will explore some of the most frequent missteps entrepreneurs make and how you can avoid them to ensure your business is strong. Let's remove this unnecessary stress for you. Understanding cash flow. Before we dive into the common mistakes, let's define cash flow. It is the net amount of cash being transferred in and out of your business. Positive cash flow means more money is entering your business than leaving it, which sounds simple, but can be really challenging to maintain. And that's why we are here to help you. Let's get started. Mistake number 1, poor credit management. The issue? Allowing customers too long to pay their invoices can severely disrupt your cash flow. The solution? Implement stricter credit terms and consider offering early payment discounts. Use automated invoicing systems like QuickBooks Online to send reminders and to track invoice statuses. Some entrepreneurs shy away from these systems because there is a small fee, but the small fee makes the payment side so much easier for your customers. And an easier payment process for your customers means faster cash in the bank for you. Rather than trying to save a penny, literally, focus your attention on the value-add components of your business and just go implement that automated invoicing function today. Mistake number 2, overestimating future sales. The issue? Being overly optimistic about future sales can lead to overspending and cash shortages. The solution? Develop conservative and realistic sales forecasts. Regularly review and adjust your forecasts based on actual sales data and market conditions. It is okay to be optimistic and aggressive with your sales goals, but create 2 different versions of your forecast. One version that is aggressive to give to your sales team, and one version that's conservative so that you don't overspend your precious cash. Mistake number 3, inadequate cash flow monitoring. The issue? Not keeping a close eye on your cash flow can lead to surprises that could have been prevented. The solution? Utilize a dashboard that integrates with your financial software for real-time cash flow monitoring. Tools like Fathom, Float, or Cash Flow Tool can provide comprehensive insights and forecasts. Mistake number 4, failing to plan for seasonality. The issue? Many businesses experience seasonal fluctuations, which can impact cash flow. The solution? Analyze historical cash flow data to identify seasonal patterns and plan accordingly. Set aside cash from profits made during peak seasons to cover slower periods. Or draw on your bank line of credit during slow months and make sure it's paid down during busy months. Mistake number 5, neglecting to make adjustments. The issue? Sticking rigidly to the initial business plan without adapting to changes can hamper business flexibility. The solution? Regularly review and revise your business plan. Stay flexible and be ready to pivot strategies based on current financial performance and market opportunities. Your business will change. The economy will change. Be adaptable and ready to make decisions quickly when external influences are out of your control. Being quick to adjust and quick to decide keeps you in control as a business owner. Mistake number 6, underestimating the importance of cash reserve. The issue? Without a financial buffer, unexpected expenses can disrupt your business operations. The solution? Determine your risk tolerance. Pay attention to your stress levels when it comes to cash. Do you find yourself with increased anxiety if your cash goes below a certain dollar amount? And do you find yourself innovative and creative if it's above a certain dollar amount? Industry best practices are to build cash reserves that cover at least 3 to 6 months of operating expenses. But your risk tolerance as a business owner is important in determining the number that is right for your business. Connect with your banker to invest this excess cash in CDs or high-yield savings accounts, and They're great ways to feel like your money is working for you rather than just sitting there as buffer. Advanced tips for managing cash flow. Leverage technology. Invest in the latest financial technology to automate and streamline cash flow management. AI tools can predict cash flow trends and suggest actionable insights. Continuous education. Stay informed about financial management strategies by subscribing and participating in webinars. Reach out to experts. You don't have to do this alone. Reach out to industry experts like us at Tentho. You do not have to take on the stress of being a business owner alone. We're right there with you. Take the next step. Avoiding common cash flow mistakes is about being proactive, realistic, and strategic in your financial management. By understanding where others have faltered, you can steer clear of similar pitfalls and position your business for long-term success. Thank you for joining this course. Implement these strategies to safeguard and stabilize your business finances. Continue learning and adapting. And remember, effective cash flow management is a key driver for your business's success.